We're already in the middle of a historic XRP crash, down over 70% since the all-time high last year. But we have 2 hours to go till the futures market opens up this Sunday, and we have to watch XRP and the broader market respond to the escalation in the Middle East that we've been warning about for the past month. The double bottom that we see now on the charts is what we were warning about for the past 3 months. And we're going to continue to bring these updates so that you can stay ahead of the curve, ahead of the masses, and you can be in position to take advantage. And so let's break it down, folks. Let's get right on into it. We're talking about Iranian missiles heading towards Israel as we record this update right now. Like I said, less than 2 hours to go till the futures market opens up, and this is what we have to respond to. Video footage capturing the launches from Iran. Most of them have been intercepted so far, but this is the escalation that we were really concerned about. It is here, and we will watch as the market opens up here in just a couple hours. Now, we got a fake out in the market with a little bit of a relief rally yesterday, overnight, and into this morning. I'm going to show you that. Now, this is the XRP crash, though. 71% now, measuring from $3.66 all the way down here to $1.05. We're at $1.12 as I record this update, but no denying it, we're absolutely in an XRP crash and bear market. And the same thing for Bitcoin. We see that Bitcoin did come back down here to that double bottom level that I had, the red box. Yes, I was wrong on the timing, but we kept our orders ready. And 3 months of chop and a bull trap rally didn't fake us out or make us change what we saw still coming, which was that double bottom and an opportunity to fill up those XRP bags. Now I'm zooming in on the 1 hour chart to show you where our market is currently at right now. So you can see that Bitcoin had gone all the way down here to this new low of about 59,100. But we get this relief rally Saturday into Sunday night, and basically about midnight, 3 a.m. Eastern is when we basically top out here at about 63,000 for Bitcoin. For XRP, we shot all the way up to $1.17. So this, is typical of what we see, right? After a big flush out, liquidation event, lots of capitulation, but then buyers step back in like we did, like many in our community. And by the way, that's the most fulfilling part. Not just me stacking up my bags and my orders getting filled, but getting our community in a position to take action as well. And that's the fulfilling part of my work, is all of the feedback, all of the comments over the past couple of days of people thanking me for warning about this double bottom, thanking me and telling me that they got their buy orders filled at $1.05, $1.07. And if you miss that opportunity, I think that it's going to be coming back around. Now, this gives us about 2 hours to make a move here before futures are going to be moving. And I'm expecting XRP to come back down, and this could be our shot at a $1 XRP. This could be where we see Bitcoin go back below 60K, maybe push all the way down to 55K or lower. But this is not going to last long, in my opinion. And I'm going to show you a data point here in just one moment that reiterates how great of a buying opportunity is in front of us. Quickly, though, I'm going to touch on oil. With oil, they pushed it down to about $90 per barrel on Friday. So we're looking at the oil chart right here, and you can see, I'll zoom in, since the Iran war, right? We've had oil, a lot of volatility and a lot of chop just back and forth since this Iran war started. And so I entered into an oil long over a week ago, wrote it up over 50% profit, but I bag held and held on to that bag and didn't let go. And so they crushed oil into the close on Friday down to $90 per barrel, basically back down to where I got my entry on my oil long. But I held on to it in anticipation of the escalation this weekend, and that's what happened. And I'm not happy to be right about this call, because it means more bloodshed, it means more chaos, and it means higher oil prices, and it means more inflation. There's nothing good that comes of this, right? So I'm not happy that this is how it's playing out, but we are going to make money in the meantime. And so I'm holding on to that oil long. My entry's at $89.71. I'm expecting oil to gap up, probably up to at least $93 to $95, maybe even going to move towards $100 per barrel in the next 24 hours. And I'll be looking to take profit on that trade. Specifically on oil, we have an article here from Bloomberg, and I'm just going to read off these bullet points. The reason why oil hasn't gone to $150 per barrel yet is because we had some cushion here. China slashed its oil imports by nearly 40% in May, offsetting up to a fifth of the lost supply. The United States has been pumping out and exporting. They increased crude and fuel exports by more than 2 million barrels per day above last year's average. We also have been drawing down on our strategic petroleum reserve, including 1.4 million barrels a day in a single week. We've released 172 million barrels. We're draining our reserves. The Gulf producers also rerouted millions of barrels daily through pipelines to the Red Sea, and that has helped relieve as well too. But remember, those are sitting ducks. Those are sitting pipelines, very easy to hit. And so I know that it provided some relief, but now that the war is back on, I worry that those pipelines, and they already have been hit, but we could see those pipelines attacked further. And the point here is that buffers are running out. Global inventories are now drawing down at a record pace of 70 to 80 million barrels every single week. U.S. crude stocks have fallen to the lowest level in more than 2 decades. Critical storage is, basically full, right? And critical storage is approaching operational lows as summer demand rises. I misspoke there. Right? So the critical storage is low and running out. And analysts calculate the market has already lost the equivalent of 1 billion barrels of oil with no replacement in sight. So Trump headlines, Axios reports, fake news media, Bubble Vision, CNBC, it all ignores the reality on the ground. That misinformation, that mispricing is an arbitrage that I'm going to take advantage of, right? The discrepancy between the market trying to price in peace and the reality of no peace in sight. In fact, war being back on, and the buffers that were used to keep oil suppressed, we've run out of those buffers. This is where it gets intense. And I covered it yesterday in my update on the reverse carry trade. If you guys missed that one, go check that out. And the reason why I keep talking about the reverse carry trade is because there's a lot of misinformation. A lot of people that try to take the reverse carry trade, drum up some crazy theory, tack on XRP price explosion to it, and that's the theory. A lot of people getting smoked with that misunderstanding of how the reverse carry trade plays out, which is why we continue to cover it. This market bleeds out before you get to any bull run, before you get to any XRP price explosion. But we bring all this to your attention so that you can take advantage of it. Check out this data point. You want to know when it's time to buy? You want to know why we continue to hit 5 baggers and 10 baggers in crypto? It's because we're willing to participate and buy the blood in the streets when nobody else does, when retail has left and is gone. And the more retail I see crying in my comments, the more I buy. The more retail, Joe Blow 69 leaves a comment that's crappy in the comments down below saying XRP sucks, the more I buy. Retail leaving is a sign to throw everything you have at this market. There's a reason why retail is where they are at and why they don't make money in these markets. They're too scared to step in when you should be moving, just like we are right now. The same retail that probably FOMO'd into the bull trap rally over the past 3 months. Bull run's back on. Bitcoin above 80K. XRP up to $1.60. We didn't buy into those rallies not one single time. There's a big difference out here between who's pretending to have real analysis and who actually has macro analysis and who is actually making a profit out here. I wish people would just be honest with you. If you're not making money, just admit that. And the reason why we continue to win, like I said, is because when we We've lived through these moments before, and we aren't messing around. Retail has vanished from the crypto market. Centralized exchange spot volume collapsed to 679 billion, the lowest level since October 2023, which, by the way, was a fantastic time to buy. Just like every time we've seen retail leave, it's a fantastic time to buy. Spot trading is now down 46% year over year, a staggering 67% drawdown from its October 2025 peak. Major exchanges are rushing to pivot to gold, silver, oil stocks, and prediction markets, where the monthly volume has already exploded beyond 450 billion. Take a look at this chart. We are down here, 0.7 trillion in trading volume last month. When was the last time that we were at this level? October 2024, right before XRP pumped 600%, right before XLM pumped 600%, right before HBAR pumped 800%. And the same winners in that cycle are going to be the same winners again, because it's now coming to utility. We're leaving the era of speculation. There's no more meme seasons. The trenches are dead. And now we have to bring it back with utility. But look at this chart, right? The best times to buy is when retail is gone, when retail trading volume is at these lower levels. In fact, this level right here is lower than we were at in October 2024. You got to go back, as they said right here, to October 2023, the depths of the last bear market, when it also was a fantastic time to buy. And we were buying the heck out of XRP then. We're buying the heck out of XRP right now. Speaking of utility in the next cycle, Hunter Horsley summarizes it right here. The biggest risk problem for crypto right now, global equity markets are 130 trillion. Global fixed income, 150 trillion. Global real estate, 300 trillion. Gold, 30 trillion. Alts, 30 trillion as alternative investment market. So you have 640 trillion in these markets, and currently crypto sits at 2 trillion. That's less than Microsoft, less than 1%, a blip in global capital markets. So the biggest obstacle for crypto right now isn't Saylor selling a little bit of Bitcoin. I would say that is an issue for Bitcoin. It did send a signal. Or digital asset treasury companies, which I also am concerned about. I think that Michael Saylor, Tom Lee, and some of these big guys are being hunted down by some other players on Wall Street. That's another story. The biggest obstacles aren't other layer ones or some traders selling. That's all deeply self-obsessed zoom out. The vast majority of investors aren't following any of that. And I agree with this comment. Ask a colleague or non-crypto native friend this week. It's obvious. They don't even know about digital asset treasury companies. They don't know that Saylor sold Bitcoin. They don't know L1, L2, and how any of this works. They're waiting for number go back up. And the point that I'm trying to say right now, number going back up based off of utility is what we are going to see. And that's what we want to see. It's what we've been waiting for. Rather, the biggest obstacle is that by default, no one cares. No one has to invest in anything, including crypto. This space needs to give people a reason to care, a reason to want to participate. It needs to prove use and value and build use cases that actually have an impact on the world. Help this space have a worthwhile impact or support those that are trying. A rising tide will lift all ships. And so I agree with this sentiment 100%. We bring it back to utility. And the DTCC news pumping stellar is exactly what I want to see. I want to see a lot more of that. I want to see Hyperliquid pumping based off of the utility and use case that Hyperliquid has. I want to see that type of pump. I want to see the DTCC stellar news pumping XLM. Those are real pumps. Sure, the utility isn't even live. DTCC hasn't gone live on Stellar yet, right? But just the announcement and that narrative being based off of utility is what we want to see more of. And I'm telling you right now, the more crying, complaining, the further the centralized exchange volume goes down, the more we know that this is the buying opportunity, because we've seen it in every previous cycle. Some of you guys haven't had the opportunity to live through a couple bear markets like I have. I'm telling you, this is my third bear market. I'm not messing it up this time. I'm not going to regret not allocating every last dollar that I have to crypto during this bear market. I had that regret after 2018. I had that regret after 2020 and 2023. I'm not going to live with that regret this cycle. I'm literally throwing every last dollar I have at this market. I bought more XRP. I bought more HBAR over the weekend, and our patience has paid off. The market came back to us. It's a big crash. Are we worried at all? Is there any panic over here at all? None. Perfectly calm, sitting back, letting our orders be filled, letting retail freak out, letting, some of these bigger players that are about to be liquidated, letting them freak out. We're not getting liquidated. We're still adding, filling up our bags, and we're taking advantage of this XRP crash, of the XLM crash, of the HBAR crash, because just like they did last cycle, they're going to do it again. American cryptos, right? XRP, XLM, HBAR. These cryptos that are based in America are going to be the biggest benefactors of the Clarity Act and of the utility bull run. 500% pump, 800% pump, it's coming back. And when it does, we won't be surprised when that happens either. Just like we aren't surprised that this market's crashing and bleeding out right now, we understand the debt, currency, and liquidity crisis. We understand the macro, the geopolitics, and the war not being close to being done. We stuck to our guns, and now we're getting the results. And so I hope that you guys have been able to navigate this. Hopefully we provide some calm. Hopefully we cut through the noise. And hopefully you guys have been appreciating this analysis, and it's helped you get into a better position. As always, I'm not here to give you financial advice and to tell you what to buy or when to buy. I've just been explaining what I'm doing, and you guys can see the analysis has paid off, and our bags are growing substantially at this time because of that. So I hope you guys are joining me on this bear market journey. The end is close, so don't get too worried out there. The end is close, right? We get through the climax of the conflict, and then it's back to building. It's back to fundamentals, and the inflows are going to pour back into crypto just like they did in 2024. They'll be coming back here in 2026, taking us to new all-time highs, and we'll be locking in those 3-bagger, 5-bagger, 10-baggers. We make that. We make those gains by buying right now. So if you guys appreciate this update, please help us out by liking this video, sharing it out far and wide, and we will see you guys. It's going to be a busy week, so stay tuned for more. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.